Assalamu alaikum. Hello everyone. Today is Sunday, the 23rd of June 2024. I'll be doing the weekly market review, starting with DXY. Here we have the weekly time frame chart. As you can see, as I mentioned last week, I'm looking for higher prices, and we're slowly approaching high prices. We created a fair value gap as a result, as you can see. Before doing that, we took this low as a stop rate. We took out the sell side liquidity, and then we rolled it up higher, aiming at the rejection block, this buy side liquidity, and this buy side liquidity. Now this move to the upside, I think it's the manipulation. This would be the accumulation on the higher time frame. If you go to the 3 month chart or to the monthly chart, I'm considering this a consolidation. Manipulation to the upside, probably reaching to the 108 or 110 level before trading down lower. And these three candles will be the bearish breaker. Once we trade above this high and we break down lower, we have higher high, high, low, higher high potentially, and then lower low. This will create a three consecutive down close candles as a bearish breaker, and this will just drive and tank US dollar index to the ground. Why am I saying this? Because if you look closely to the news, to the top news that are happening around the world, geopolitical news that are also happening, we can see that there's one agreement between the US and KSA, which is the petrodollar agreement, to sell petrol for US dollar index using the currency US dollar. And now that agreement comes to an end, and now KSA can sell their oil in any currency of their desire or their preference. It can be the Saudi Riyal, it can be any other currency. So as a result, that rally up higher is just to let people think that we are, or the US dollar index is safe and everyone's going to be investing here. After we break above this high, everyone will be buying at this resistance as support. They'll be buying there, and that's where smart money or people with deep pockets, deep liquidity are going to be selling, aiming at this low as low hanging fruit objective, and just looking for rejection moves and to the downside. We're reaching to the 95 level. So going to the daily time frame chart. As also, you can see the fair value gap between this candle's high, this candle's low. Price is likely to retrace to that level before attacking these buy side liquidities. And if it doesn't reach to that level, it will keep it unfilled. And we can see the constant confidence of this candle, the discount wick of this candle, the constant confidence. We can see it being respected as support that can send price up here to the buy side liquidity objectives. Going to the daily time frame chart. There's a lot of things I want to explain everything. Here we have the bullish breaker, these consecutive up close candles. These two consecutive up close candles are considered as a bullish breaker because we have low, high, lower low, as you can see, and then we rolled up higher. Bullish breaker right there. We have fair value gap high, fair value gap low, price retrace to it and roll it up higher. As a result, it created a bullish order block right there. Price retrace to the bullish order block and roll it up higher. Now, this is the fair value gap high, this is the fair value gap low. Price can retrace, take out this low. This is ICT bullish pattern number 1. If you go to this channel to the core content, you can learn more about that pattern. It can retrace, take out this low, and still not violate the mean threshold of this bullish order block, and then rally up higher, take out the buy side liquidity and this buy side liquidity. As you can see, relative equal highs, price is likely to just attack these highs and make them jagged. So that's gonna be pretty much it for DXY. We're still in a buy program and I'm still looking for higher prices. Going to ES, here I'm viewing the continuous contract and the weekly frame chart. We're still looking for prices still in the buy program and the in the index, the ES, NQ, and Dow. You can see as a result of last week's trading, we created a fair value gap between this candle's low and this candle's high. That fair value gap can be revisited as an internal to external, or it can be just reverse. But our main concern is that we're using the internal liquidity to go up higher for the external liquidity, because we're in a buy program. We don't try to pick the top in a buy program, and we never try to pick the bottom in the sell program. So since we're in a buy program here on ES or the indices in general, we are looking for higher prices. So here, my potential scenario that I'm looking for is that retracement to this favorite gap, and from here it can overshoot to the bullish order block here, and then from here it shoot up higher towards this buy side liquidity. So we have accumulation, manipulation, distribution, something that matter. Now going to the daily time frame chart, you can see this is the daily favorite gap, Fridays and Wednesday. Monday traded down lower, traded to the favorite gap. Tuesday, rallied up higher, took out this high. From here, this could be your trade on Tuesday, and you can be done for the week. Anyway, Wednesday, Thursday, Friday, just was a retracement, formed a high here. From here, you can see retracement to take the slow inside the weekly gap, potentially reach bullish order block here. This is a bullish breaker here because we have a low, high, lower low, which traded into the favorite gap, weekly favorite gap here, this weekly favorite gap, and then you are up higher. This would be bullish breaker. Price would retrace downward the bullish order block, the weekly bullish order block, and the daily bullish breaker. And from here, it can continue its buy program to the upside. The low resistance liquidity run are gonna be in the buy program in the direction of the upside. But any retracement is gonna be finding a really hard time to retrace down lower. As you can see, retracement is finding really difficulty to trade down lower. Trading up higher retracement, it's finding a difficult time to actually trade down lower, which means we're in a really strong buy program. The same thing here. Let's consider these as like this one here. It's just a retracement of the favorite gap right there, this favorite gap, and potentially from here just running up higher. So that's gonna be pretty much it for ES. We're still looking for high prices and we're still in a buy program. Going to NQ, here I'm viewing the continuous contract, and I'm viewing the weekly time frame chart. This is the weekly favorite gap between this candle's low, this candle's high, and we have a bullish order block right there. Price can retrace, work inside this area, overshoot perhaps to the bullish order block, and then retrace and continue its price program to attack this buy side liquidity. For NQ, we're aiming at two targets: the constant encroachment of that candle or that weak candle, the premium wick, and the high, which is the external range liquidity. Going to the daily time frame chart, the same thing can be mentioned here, but the favorite gap here is not visited. As you can see, when compared to ES, we took out the slow and the favorite gap has been visited. For NQ, we left these as relative equal lows. So there's a potential chance that we might run down lower, take out these lows, work inside the favorite gap, and then perhaps overshoot to this bullish order block, and then continue its buy program to the upside, attacking this buy side liquidity and the constant encroachment of that premium wick on the weekly time frame chart. So that's gonna be pretty much it for NQ. We're still looking for higher prices. Going to Dow, here I'm viewing the continuous contract, and I'm viewing the weekly time frame chart. As you can see, there is not much sync between ES, NQ, and Dow. ES and NQ are trading at the all-time high. Dow is pretty much being held in consolidation and is not willing to move and to be in sync as other markets such as ES and NQ are trading. But this won't last for long because Nvidia as a company is gonna be added to this index, and one of the companies of this index, the lowest performing company, is gonna be moved from this index, and Nvidia is gonna be added. So we can see a lot of movement happening, perhaps in the next period of time, probably in the next 3 months, in down that can potentially you can see it trading parabolic in a crazy way to the upside. So it revisits the weekly favorite gap between this candle's low, this candle's high. Now I would want it to trade up higher to be in sync, but obviously since it's like trading down lower and it's weak, it can just trade down lower and attack this side liquidity after it has revisited the internal edge liquidity right there. Going to the daily time frame chart, the same thing. We formed vertical as here and attacked them here. It didn't reach to the daily favorite gap between this candle's low, this candle's high, but it can reach to it next week as a manipulation, extra manipulation here to attack this high, and then break down lower to attack these lows and to reach this low. So that's gonna be pretty much it for Dow. I'm not really touching it because it's indecisive and it's not in sync with what other indices are doing, the ES and NQ. Going to EURUSD, also known as the fiber. Here I'm viewing the weekly time frame chart. As I mentioned, for DXY we're bullish, and for as a result, this means that on forex market, the EURUSD and pound USD, it's diametrically opposed, so we're looking for lower prices. As you can see, we took out this high, broke down lower. We have a fair value gap here. After we close below it right there, it's considered as an inversion fair value gap right there, and we broke down lower. Last week it was just an inside this range, inside the last week's trading range. So you can consider that as a consolidation. It's just putting order. It's like holding pattern. We have as we create fair value gap between this candle's low, this candle's high. Price can retrace to that fair value gap, or it can just retrace to the constant core. So we have to monitor it closely next trading week on the intraday time frame chart to see if it's showing any resistance or any respect to the constant core of that premium wick of this week's trading. Next week's trading, we will be monitoring that, and we're obviously we're forming here relative equal lows. So this is sell side liquidity. We have sell side liquidity here, which is the daily time frame sell side liquidity. I will be showing it to you later on. And we have this sell side liquidity, and obviously the terminus would be the sell side liquidity. So this fair gap price can retrace to it before breakdown lower. Going to the daily time frame chart, I'll try to explain everything in pretty much in a good manner so you can understand what I'm trying to explain here. The inversion fair value gap, which I already mentioned and explained on the weekly time frame chart, the stop, the rate on these stops, the buy side liquidity, and then break down lower. This is a bearish breaker because we took out this high and then we broke down lower. These two consecutive down close candles are considered as a bearish breaker right there. We have a fair value gap, daily fair value gap between this candle's low, this candle's high. Price retraced, walked inside this fair value gap, and broke down lower. And this creates a bearish order block. And we have also the weekly fair value gap, which is from this candle's low to this candle's high right there. Price can retrace to that area and pick out stops. We down low. We have a fair value gap that has been created between Friday's trading and Wednesday's trading. So Thursday was a good range to the downside, and then Friday was closing here, so we created a fair value gap between this candles, Wednesday's low and Friday's high. Price can retrace, revisit the bullish order block, and potentially take out the high of the weekly fair value gap low, and probably just trade down lower and take out the lows, this low, this low, and this low. Look at this as a market maker sell model. We have the original consolidation, accumulation, reaccumulation, reaccumulation, and here's smart money reversal, distribution, second leg of distribution, and potentially the ending of the market maker sell model. So we're starting our second leg of distribution towards this low, which is the original consolidation. And it is one of the easiest legs to be traded because there's going to be a very quick movement in price towards the downside. This is going to be sending price to the downside, and it will have absolutely no difficulty in reaching to these levels. Now, from here, I'm expecting the next 2 weeks, within the next 2 weeks, to attack this level right there. That's my thought of mind of where I'm expecting price to be in about less than 2 weeks. I'm expecting price to just go this level within the 2 weeks span of time. So that's pretty much for EURUSD, or also known as the going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, the same thing is mentioned here for, because if the XY is bullish, that means for the other asset classes, for the forex market, the EURUSD and pound USD, we're bearish. So we took out this high, as you can see, on pound USD, and we started trading down lower. That's a very gap. I'm looking at it to be treated as an inversion fair gap. So I want to see next week a closure below this high, or the fair gap low, and potentially treat it as resistance once we trace to it. And the last line of defense would be the constant encouragement of that potentially futuristic inversion fair value gap that can potentially send the price lower towards this low, take out this low, and we have this sell liquidity. The terminus would be this low. Going to the daily time frame chart, as you can see, the rate on stops right there, and we broke down lower. That's a bearish breaker right there. High, low, higher, high, lower, low. Bearish breaker retracement to the bearish breaker and the fair value gap on Wednesday. And Wednesday formed the high of the week, and then it broke down lower. These will be considered as a bearish order block, and we have a fair value gap price can retrace, work inside the fair value gap, weekly fair value gap high, and treat it as resistance. One more touch, it will be just wicks above this high, this level, which is the weekly fair value gap high, and from here just break down lower towards this low here. These lows, we have this fair value gap right there. I really like this level between this candle's high, this candle's low. We can see some reaction once we trade towards this level. Mark my words, and then from here towards the sell side liquidity. So that's gonna be pretty much it for this weekly review. I pretty much covered many of the asset classes that are traded in today's age. There's just one market that I'm not reviewing, or actually two markets, which is gold and oil, because I'm not really active trading those markets, and I believe that there's a very high manipulation happening in gold at the moment because of what's happening in the BRICS nation and how they are accumulating gold to back up their new currency that's going to be deployed into our world soon enough. So as a result, this can create a very and high manipulation environment and condition in that asset class. And overall, it's considered the highest manipulated asset class among all the other asset classes and commodities, such as the forex market, the indices, etc. Gold is considered one of the highest manipulated asset class between them all. So I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.